Hello again, everyone. In this technical analysis of the stock market video, I'm calling this when the bow breaks because that's what this looks like to me when we look at the S&P on the 65-minute chart. I call it my hourly chart because it's close. It's close to an hour, 65 minutes. It looks like a tree branch. And the further out you go on a tree branch, the further out, the riskier it gets. And when it breaks, you come down fast. So let's go in and talk about it. So when the bow breaks. All right, so right now, this is the S&P 500. Here's the big bounce we've gotten since Christmas. I believe that we are in an ABC zigzag retracement, okay? Now, granted, this is a deep retracement. We've gone beyond 61.8% retracement in here. And what am I talking about? I'm talking about two, let me click on it, 2 versus 1. Okay, I'm talking about a retracement of 2 versus 1. So it's deep, but when I start looking at the corrective move that we've got, the ABC, what I'm looking for in terms of a target for the end of wave C, the first target was 100%, where wave C would equal A. Well, that occurred at 26.25, let's call it, rounding it. Well, we blew past that on Thursday and into Friday, okay? So we kind of hung right there on Wednesday, the end of Tuesday and into Wednesday. We kind of hung there, and then we moved up above it. Now, the other thing that's interesting is look at this ending, this diagonal, this wedge-type pattern that we've got here. If you just traditional technical analysis, not even looking at Elliott wave pattern here, traditional technical analysis would say when you break down out of a wedge pattern, you rapidly go to the beginning of the wedge, okay? So that's the other thing I think is going to be a surprise to everyone. You know, you look to see, well, number one, the market has pulled back a lot deeper than I think everybody was expecting, and I know I was. Last week I published a video that said U-turn ahead. Well, where was last week? Where's the 11th? Let's go right here. So Friday the 11th, here was the last candle. And I thought we were getting to that point where we're getting close. Well, you know, this is the last week's worth of hourly bars in here, and we continue to push higher. So now I think we're even closer, okay? My next target is 138.2% of A. These are the next two Fibonacci targets, okay? So 26.97 if we continue to push higher. The other point I want to make on this is look how overbought we are on the RSI. Now, I use a 10-bar RSI. You see that right here, RSI 10. I like it because it just makes it clearer when you get into the overbought, oversold. I just like it, and I've used it for a long, long time. So right now, our RSI reading is 87.7 on the RSI, extremely overbought. Now, does that mean we have to come back down? Well, we got overbought here, not quite as bad. We were in the 70s, then we worked it off by retracing down to the 50% level, okay? And then we rallied off. And how did we work that off? By going sideways. You can do that. It's exactly what happens. But the last time we were this overbought, well, first of all, let me compare something. Look at how oversold we were at Christmas time, the New Year, Christmas Eve day, to how overbought we are now, okay? And the last time when we got to the rally peaks like this back here right before December 3rd turning point, look at the overbought situation in here. Now, we did get divergence here on November 28th, 85 on the RSI. 13 hours later, 83.2 on the RSI, and that was all she wrote. Just rolled right on over. Okay, and if you think, well, Joe, you're just using recency and recency doesn't work because you just went back to the most recent example. Well, let's go back to the second most recent example. Right here on November 7th, 84.5 on the RSI. And that's right here before we rolled down into that corrective action that happened. This was all a part of the wave 2 peak. And I can even show you one right before that, but in the interest of time, that's all I'm going to show for now. So that's the picture on the SPX. Yes, I am looking for this to break down. I think the surprise is going to be everybody's looking for a retest of this low. I think when it gets down here, it's going to blow through that low, and it's going to keep on going. All right, let's take a look at the dollar. I want to take a look at the dollar index and see what's going on. Okay, here's the dollar index, and you can see in here that right now I am looking for this to correct down, keep coming down a little bit further. Now, where am I looking for this to correct? Let me see if I could pull up my little marker in here. I'm looking for something right along that would get support right in this area, okay? So that's why I'm targeting 38.2. Now, it's a fairly shallow retracement for a wave 2, versus, wave 1. And, if you go down a little bit further, here's 50%, here's 61.8%. Once we get done correcting in here, I think we're off to the races in a primary wave 3. Okay, so why am I bullish on this? Let's go look at the weekly chart. Here's the weekly view. I feel like when I analyze this, that we've had 5 waves up into the high that occurred here in January 2017, and that's impulsive wave 1, and that we're doing impulsive wave 2. Well, actually, we've already done it. We're into impulsive wave 3. And why, 2 got a ton of support right at the highs over here of wave 1 when it pulled back. It was just a perfect support area in here. What had been resistance became major support for this wave 2. So again, why am I looking at this as cycle wave 1, 2 to the upside? Well, let me take a look at the monthly chart and show you how that looks. This goes back into the early 80s when we had interest rates in the mid-teens, okay, 15, 16%. That's when the dollar was sky high, okay? I think that what happened was we went through major corrective action in the dollar that bottomed in here into 2008. Let me get my crosshairs right in here. Yeah, March 2008. And since that big corrective low, I think we've come out, and what reinforced that was when we broke that trend line, that major downtrend line, we broke that, and then we've come back in this wave 2. Not only did it get support at the top of wave 1, it was right back on a pullback to that major trend line. And now I think we're going to be off to the races. These are just ballpark. I'm just parking these up here. These are not estimates either in time or distance at this point. I'm focused mainly right in here. Okay, so this is what I think is going on with the dollar. And here's the weekly view. Let's go back to the daily view. Actually, let me do this so I don't get screwed up. Let me go back to the daily view over here. Okay, so this is what I'm looking for. Short term, we're doing a lot of overlapping type of activity. So watching to see how this plays out. We still have lower highs and still got lower lows. So we could be doing a leading diagonal A, B, C kind of thing. We'll just have to watch and see how this plays out. All right. That's the dollar. The last thing I want to talk about today is the China Shanghai Composite. Okay, this is a weekly chart of the Shanghai Composite, okay? And when I look at this, I've kind of adjusted this. I used to look at this as this being the high that I was referencing off of this, a 2015 blow-off high that we had, okay? And I was thinking this was an A, B, and working a C. I now believe that we are in an impulsive way, either an impulsive or an ending diagonal pattern coming down in here. And why do I believe that? Because the real high was over here in 2007. And this was a high. Once I started looking and saw that the data really was a lot lower back into the 90s, etc., this was clearly the blow-off high that occurred for 2 years in here. And what we've done since then is been correcting that activity. And we've got this big cycle wave A, B, C activity that's going on, pattern that's going on. So we've got an A, B, we had a nice 3-wave, huge big 3-wave B. And now I am looking for this C wave down here to complete. And so what's my target? Where do I have it? I have this where C would equal A. It also ties in very close to a parallel line between the beginning of A and the high of B, and paralleling it down here. So this is my target. So the Shanghai Composite isn't even close to where I think it's going, in the end. And right now, this is a primary wave structure, 5-wave. Now, this could turn out to be impulsive, or it could turn out to be an ending diagonal. We'll just have to watch and see. But either way, when I'm looking at this wave 3 in here, this needs to be impulsive. That's why I'm looking for 5 waves down. So I believe the Shanghai Composite is still heading south. I think it's still got a lot more to go to the downside. Okay, that's the picture on the Shanghai Composite, and that's it for this weekend update. If you felt like the video was helpful, please hit the thumbs up, and if you're not a subscriber, subscribe. And if you'd like more information like this, head on over to joehenches.net and get on the subscriber list or check out the membership. Everyone have a wonderful weekend.